welcome back. You're watching IndianOpen right here on BloombergQuint Live. Let's look at Asia and how it's faring at this point. For the entire pack, it's a day which is seeing green, with Japan doing the best out of the lot. Hang Seng 2 is up about 0.25% or so, and Shanghai trading with gains of just 0.1%. SGX Nifty 2 joins the bandwagon. You've got gains of 0.2%, and this on a trot, I think, would be the second or third straight day that you're seeing the SGX perform well. 12,378. Inching its way towards 12,400. Can anticipate a similar open here for us as well. Yesterday's session was very encouraging, had a new record high close, made a new intraday record high as well. It's looking, you want to trust this move, but it's looking slightly more, you get apprehensive thinking that profitability is not come. Liquidity is driving this rally. So where do you draw the line, and where do you stop and think whether you want to take profits home or not?
Well, maybe make trend your friend, so that could be one thing, but wonder if the inflation numbers in any way play the party pooper in the session today. If not for the equity markets, then certainly for the yields in the session. So, and whether that percolates down to concerns around equity markets. So that should be the mix today, but the globe is looking very, very healthy. Yeah,
it is. I was just listening to Howard Marks's interview on the network, and he is actually pretty skeptical on this rally continuing, because
he's been now for a while, right?
Yeah,
the last 9 months.
And he's spoken about profitability not picking up, excess money that people have that has gone into the equity markets, and the fact that this rally has stretched for more than a decade now.
Yeah, but we've been now hearing this for the last at least 18 months, right? I remember a piece.
You don't know where it gives them.
Yeah, I mean, and Jeremy Grantham's piece about how sitting out of a rally and seeing the stocks do well while you are sitting on cash is probably as painful as being in the markets and seeing the portfolio come down. Yeah. So, remains to be seen.
All right, we'll probably try and get you that piece from Howard Marks as well, but let's also take a look at what's been happening in the derivative space. Navneet Saluja D'Souza, she's joining us right now to give us the F&O setup for today. Navneet.
Good morning to both of you. Well, the positive momentum continued for the third straight day, and as you guys highlighted, Nifty Sensex both trading at live highs. If you look at the futures and options trends, on the futures side, Nifty futures, we did not see any fresh long positions coming in yesterday's session. In fact, there was marginal unwinding which came through. For Bank Nifty, which for majority of the session underperformed Nifty, that saw some bit of covering in positions because the open interest fell by about nearly 6%, though the Nifty Bank managed to close in the positive territory. And remember, in run-up to the budget, we are seeing markets could be at live highs, but VIX is not correcting. So India VIX yesterday gained alongside markets closing at levels of 14.2. Though the options data, the trends are quite positive. You've got the Nifty PCR also, which is surging on account of more put writing coming back into the system. So yesterday's PCR was 1.63 versus previous close of about 1.54. And if you look at the distribution now for this weekly expiry, which is scheduled on January 16, that's the Thursday, maximum open interest on the call side is spread across 12,500, 12,400, while on the put side you are seeing maximum open interest now at the 12,200. Yesterday there was a lot of put writing which came in at the 12,300 strike. Almost 11 lakh shares were added here, and remember, we surpassed that mark. We closed above 12,300 for the first time, and the technical analysts have now been eyeing the 12,500 if you look at the monthly options data as well. Very quickly then on the stock futures, a lot of stocks moving around, and of course yesterday's stock was Infosys, which contributed maximum to Nifty's gain, though on the future side we witnessed short covering as the open interest was down, and after a while Colgate on the cash side also volumes were high, and there was significant long positions which were coming on the futures side, and you had something like NIT Technologies which was up and about, and long positions were seen here as well. And fresh longs also came in for a cement, South Pay Cement Company, that's Ramco Cement, on account of price hike, which some of the reports were suggesting. Very quickly then on the FI side, on the index futures, some longs were added, though if you look at the options data, you did see some bit of defensive bets coming in terms of put long, but I guess the FIs also feel the downside could be limited, hence put shots were also added. With that, it's back to you guys.
All right. Consumer price inflation surged to 7.35% in December, the highest since July 2014, and above the Monetary Policy Committee's target band of 4 plus or minus 2%. A surge in food prices and the telecom tariff hikes are said to be the main culprits. Let's welcome in Soumya Ghosh, Group Chief Economic Advisor to State Bank of India. He's joining us right now to help us understand the fine print of the inflation numbers that we saw. Did it surprise you? I mean, this has definitely come in much higher than even the most pessimistic estimates by most on the Bloomberg poll.
Yes, I think the estimates we had were close to 7%. 7.35% is a negative surprise, but the inflation is driven by GOP, basically garlic, onion, and potato. So that actually, if you strip out the impact of these three commodities, the inflation rate declines to 4.48%. And the impact of telecom tariff is also around 16 basis points. So if we exclude all these four items, the inflation is actually at 4.32%. So that's one aspect. The second aspect, however, is that the inflation has still not yet peaked out. In January, it is likely to cross 8% or close to 8%. So, and after that, it will bottom out. But as of now, the inflation trajectory remains a little bit of concern to the policymakers.
Mr. Ghosh, just the fact that we're talking about the possibility of this lasting a bit longer, till when do you see this? Because some of them are even pegging in April, till when you'll actually see these inflation numbers looking a bit more heady. And therefore then, does the RBI have any wiggle room considering growth is also becoming a big question mark?
See, actually that's a conundrum. So growth is weak, inflation is rising, and I don't think April the inflation will decline to comfortable levels. Inflation will start declining after January, but to get into comfortable levels, we may need after June or July. So in that sense, I think the RBI will be in a spot to cut rates or not. I believe that rate cut as of now is not materially possible if you just look into the inflation trajectory. But the good thing is that over the year, inflation will decline, and possibly from December to January, it could go to as much as low below 3%. So, but as of now, growth remains weak, inflation is rising, and that will be a concern to the policymakers.
Well, as it should be. Soumya, good morning. Neeraj here. Just one quick follow-up. The one constant that will now stay in inflation and maybe actually move up would be telecom rates, right? We haven't seen higher telecom rates until November or December, and they seem to be on a higher trajectory now, probably even more so. Could that be the constant worry, or you do not think that will be a big driver?
No, see, inflation, we had actually estimated that the total impact of telecom tariff hike would be around 40 basis points, or it could be higher than, 40 to 50 basis points. 16 BPS have already come through in December, and possibly another 10 to 15 could come in January. After that, it remains to be seen how that is spread out, because it is possible that an increase in the telecom tariff could also lead to some amount of demand moderation. So maybe another 15 basis point of impact on the telecom tariff, but the point is that after that, it remains at that elevated level for a long time, even though it may not incrementally add to the overall contribution to inflation. So in my sense, there will be impact on the inflation trajectory, but it remains to be seen that how that plays out.
Okay. Soumya, we'll leave it at that. Thank you so much for taking the time out and being with us today. I appreciate your time. Well, that's a view from Soumya Ghosh of SBI. Mayuresh Joshi, Head of Equity Research at William O'Neill Johnson as well. Mayuresh, good morning. And otherwise, smoothly moving up markets, could this inflation print play a bit of a party pooper? And if not for the markets at large, for the PSU banks, which typically tend to react either direction based on the print?
Oh yes, it might. So morning Neeraj, first of all. Morning Davina. So yes, I think it's a cause of concern on the macro front, right? And as Soumya was pointing out, I think it's going to take a very gradient downslope to probably get the inflation numbers back on track. So I think it's a classical dichotomy that RBI has, with inflation probably still remaining sticky and growth not coming through. So I think the transmission is the only way forward, and you rightly pointed out, I think PSU banks do react, not just to this, but also I think to their core data points as well. So I think how the numbers are going to pan out, both in terms of recognition as well as the elevated provisioning that need to do, is going to be critical. I think most PSU banks, Neeraj, have pointed out that recoveries are going to be better than the first half. So I think there are a lot of monitorables for PSU banks at this point of time.
Just drawing some kind of extracting the fact that we've seen food price inflation coming out so much and a bulk of the Indian consumer, much of their money and the savings, which is not really high at this point, is going towards food, which curtails spending on other things. Then how does one talk about consumption picking up if you're looking at an inflation rate of 7.35, which could go up to about 8% in January? Yeah, but there's no spare money.
No, absolutely right, and that's the entire premise, right? Why spending was not coming through. Largely, I think the rural diaspora has not seen wages go up. There have been issues related to floods, so on and so forth, right? Even the MSP hikes that have been taken, I think it's been restricted to a certain quantity. So not the entire portion has probably got the right dues in terms of MSPs. And obviously, I think that's the way it should be. But again, a large element in terms of the inflation trajectory being transient, at least it seems to be the case this case round, because I think it was more a spike, as Soumya was pointing out, onions, potatoes to a certain extent, and that should probably get off over the next few months. I think the Rabi season, Devina, is something that a lot of people are talking about this time around. I think it's going to be an extremely good harvest, because if you probably look at the acreage under sowing that has happened this year compared to the last, it's far larger, and in the sense the crops under cultivation also, I think, far more lucrative at this point of time. So as that output starts coming through into the markets, as I've always pointed out, I think Q3, Q1 probably should start looking far better. By that point of time, inflation also cools off. So I think spending should come back. So I think the theme that you're probably looking for the next financial year is based on both these premises of a very, very healthy Rabi realization coming through, leading to a better Kharif sowing season as well. And if the rain gods probably favor us, I think inflation should also be controlled. So yes, spending should come through over the next few quarters.
Okay. Just, before we go on to our research team and get in a sense as to what is the most important thing that we need to watch out for today, just a quick word on IndusInd Bank from you.
No, so I think it clearly needs to be watched out, right? Because I think the entire bulk of lending goes to vehicle financing. So how does that segment track for IndusInd Bank is going to be critical, because it's going through a lot of pain. Again, the recognition that they probably need to do in a few of their sub-asset classes, I think that also needs to be closely monitored. So yeah, I think wait for numbers. I think at least I'll wait for numbers in terms of getting further clarity on how to approach the stock.
Yeah, it's an active stock, and I think, as we discussed, viewers keep in mind that if indeed the bottom line numbers being low need not necessarily be a bad piece of news, or the bottom line numbers being high and the provision coverage ratio not quite moving up, or the provisions not quite moving up, might actually not be viewed positively. So it's a difficult one, IndusInd Bank, which is why this quarter is particularly so important for this stock. Let's wait and watch what it delivers. Speaking of companies that will come out with numbers today, Wipro is the other one that comes out with numbers. Let me go across to our research team to try and get a sense of what Wipro might do in addition to IndusInd Bank. We also talk about some other key results that have come out, particularly Delta Corp, and then some stocks in news which should be monitored in the session today. So Nikki, Amit, as well as Agam join in to talk about all of these. Well, for a change, I'm not starting with the lady, but starting with the gentleman. Agam, we were talking about IndusInd Bank and the expectations thereof. What about Wipro?
Well, Wipro is going to come up with another steady quarter. We're expecting IT services revenues to rise by around 2.6%, and that should be nearer to the guided range of around 0.5% to as much as 2.8% for the third quarter. We are expecting a little bit of an improvement in your operating margins as well, expected to come in at around 17.4%, and profitability could, however, decline by a little over 4%. And the reason here is, again, one-offs, as has been the case for Wipro over the past few quarters. We must remember that as we move into the final quarter of this financial year, when it comes to the revenue guidance, analysts are baking in about 0.5% to 2.5% growth on a sequential basis. We must also understand that this particular quarter is a relatively smaller one for the entire industry because of furloughs, and that's the reason why there is an expectation of a sequential growth going in. In terms of key factors to watch, we are watching out for the financial sector and how things are panning out there. We're also keeping an eye on several deal wins and how things are coming through. The company has bought over ITI. That's an acquisition which may play in favor of Wipro. On the whole, it's going to be a fairly steady quarter in terms of expectations.
Steady quarter in terms of expectations. Numbers likely to come out post-market hours. Keep that at the back of your mind. Well, speaking of numbers, Delta Corp came out with numbers. And usually what is supposed to be a strong quarter, especially in Goa, hasn't quite played out, Amit.
Well, the third quarter is expected to be a strong quarter for Delta Corp has actually come out weak. The revenue has been flat compared to last year at close to 205 crore rupees. The EBITDA was down nearly 8% compared to last year to close to 79 crore rupees. Margins came in lower at 38.5%. However, the company's net profit, now that was higher by 9% compared to last year to close to 55 crore rupees. Now this was aided by two factors. Firstly, lower tax rate and secondly, higher other income. The tax rate was at 25% as compared to 36.5% last year, while other income was up nearly 50% compared to last year to close to 8.3 crore rupees. Now, if you see the segment-wise revenue of the company, the casino gaming segment revenue, that was down nearly 3% to close to 195 crore rupees. Now, this was due to maintenance seen in one of the casino vessels, which was not operational for nearly 25 days during the quarter, and that's the main reason why we have seen such a decline in the EBITDA and a flat revenue growth for the company in third quarter. The online skill gaming division revenue, now that was up nearly 9%, while the EBIT from that segment was up nearly 51% compared to last year. Hospitality division revenue growth was flat at 20 crore rupees, but the EBIT losses did contract to 3.85 crore rupees in the third quarter compared to last year. So the only pain point for Delta Corp in this quarter was the casino gaming segment revenue, and that was because of a vessel shutdown due to maintenance issue which impacted the company in the third quarter of financial year 2020.
Let's talk is actually a good run, so maybe it will show some reaction today. What happened, guys? You guys didn't go and gamble in Goa this time?
The was shut down.
Just a joke, anyways. But okay, thanks for that, Amit. Nikki, to the other stocks in news today.
Yeah, a couple of them actually. I'm going to start off with Lind India, where the company has approved slump sale of Biloxi divestment business for a consideration of around 55 crore, fraction amount out there, given that the market capitalization of the company is around 5,500 crore. But then the point that needs to be noted here that the divestment continues. Back in December, we also saw some amount of Southeast divestment business being taken care of, or rather sold off by the company. NMDC, where the company has gone ahead and completed the execution of mining lease agreement of 4 mines in Chhattisgarh, pretty much on expected lines, but then the lease period is for 15 years. Notably, most of the lease period is in normal base case scenario until 20 years. So there is a bit of a smaller period that we're looking at for this one. IRCTC, where the Ministry of Railways has gone ahead and given an approval to the company to operate Ahmedabad-Mumbai Central Tejas Express. Now this is a premium product that they have gone ahead and given an approval to, but then the commissioning basis is not expected to considerably contribute to the revenue of the counter. Inaugural run for this particular express starts on Jan 17, and the commercial, for that matter, commercial run starts on Jan 19th. Last one that we're looking at is Religear Enterprises, where there is a bulk deal out there. Ashish Kacholia has gone ahead and acquired 1.7% stake in the counter. We also have Mukul Agarwal, which is bought in 1.13% stake. On the selling side, we have Axis Bank, which is sold in close to 3.5% or more than 3.5% stake in this counter.
Okay, well, we'll watch out for all of these. Religear is an interesting one too. Thanks a lot, all three of you, for giving us those updates. I'm tempted to ask about Religear, but Mayuresh, I'll first stick to Delta Corp. The numbers and the stock has had a bit of a run as well, but that notwithstanding, always touted to be this one which has got a unique business model and therefore will get the valuation multiples. The last 18 months, it's been under this, stuck in this range between like 175 to about 225, just doesn't budge out of it.
Oh, absolutely, Neeraj. And I think we've discussed this in the past as well. I think my only concern, which the market also probably shares, is the regulatory headwinds, right? So if regulatory headwinds continue, and it might continue because you might see a change of policy suddenly, I think that creates a huge amount of disruption for investors. So again, I think nothing wrong with the business model at all, as I've been saying time and again. But I think it's that regulatory overhang which probably still creates that range-bound movement for the stock.
Okay, that's Delta Corp for you at 206 right now. Coming back to Mayuresh in just a few moments, but it's also important to get in a sense of how trade can shape up in today's session. So Gaurav Bissa, AVP at LKP Securities, is joining us right now. Amit, Shah, Head of Product and Research at BOBCAPS, is also here with us. Gentlemen, good morning to both of you. I'll start off with you, Gaurav, on the index first off. Likelihood of a positive open yet again. Would it be prudent to take a long position at the start of the trading session?
Good morning. There were hurdles at levels of 12,300 on the spot side, where we've seen some amount of consolidation, some amount of mild correction coming from those levels. But then again, we have already seen a good move from 12,300 And today, if we see a 30-40 points gap up, then I don't see a reason that one should be long, for the reason that the stop loss would be deep around 12,270 to 80. So the risk would be futile. So in my opinion, you wait for a dip when markets are trading at lifetime high. It becomes very important and one has to be very careful about the entries because there's a lot of euphoria going around. You buy anything and it's going to give you money. That kind of euphoria comes into the picture. So in my opinion, one should wait for a dip towards 12,300 or maybe 12,320. Keep a stop of 12,270 on the upside, 12,380, 400 is what I would be looking at. So I would not buy at the open, but if there's some amount of consolidation, some dip, then yes, it's a buy on this for time being.
Okay. Amit Shah, what's your index called? Nifty, Bank Nifty, both?
Hi, good morning. So if you look at the market in the last couple of years, it has in a rising trend where on the upside 12,300 acts as a key resistance mark. Importantly, it's more on the time wise where Nifty needs to sustain more about 12,300 mark to gain further strength. In my view, on the downside, it holds multiple support with immediate being at 12,200 to 12,150 odd. Any dip towards that, it can be treated as buying opportunity. But on the upside, 12,500 acts as a stiff resistance where the maximum call writers are located. So the demanding resistance, as and when the time passes, it's going to move higher. So it is important that market finds intensity in the up move in the price, where sustaining about 12,300 will be the key in the coming few days. So my recommendation would be a derivative trade where it's a kind of a hedge trade to long on Nifty, where one can buy a Nifty future at current levels and to hedge the position on the downside can accumulate a 12,300 strike put option for the next week of expiry, which is trading around 75 odd basis points. So the total risk is close to around 100 odd points. Even if I consider the stop loss of 12,200, the risk is close to around 130 odd points. So this is mitigating the risk, and trader can stay intact to this strategy for till the next week of Nifty expiry.
Okay, coming back to your stock ideas in just a few moments, we're on to our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has run up on a particular stock. Today, what's the stock, Yash? Good morning.
Morning, Devina. So we're looking at ICICI Prudential, and it has managed to break out from its falling wedge pattern on the daily charts, as well as the MACD indicator suggesting a buy signal. But going with the MACD indicator, let's first try and understand what it is and basically how do you interpret it. The MACD indicator is a trend following momentum indicator and shows you the relationship between the two moving averages. How do you interpret it? You go long when the MACD line crosses above the signal line from below, and you go short when the MACD line crosses below the signal line from above. Now coming back to the price chart of ICICI Prudential, and what we've seen over here is that the MACD line, the MACD indicator in the lower panel, that has given a positive crossover. So the MACD line, which is the one in blue color, that has crossed above the white signal line to give that positive crossover on the daily time frame. Not just that, as far as the price action is also concerned, we saw that the stock topped out around the mark of almost 535, 530, 533 back in October last year, and since then it had been in somewhat of a downtrend, but we've seen last 4 trading sessions have been extremely positive. In fact, 3 out of those last 4 trading sessions have ended with gains, and substantial ones on the back of higher volumes as well. So there is pickup as far as momentum is concerned. We've seen the RSI, the ADX indicators too giving positive divergences. So multiple factors indicating right now that the momentum is on the long side as far as ICICI Prudential is concerned.
And how well has this done in the past, Yash?
So they've been 4 out of the last 5 times that the MACD indicator has given a positive crossover. The stock on an average over the next 1 month period on a closing basis has given returns of close to around 6.5%.
Well, that's interesting. Yesterday, the Bloomberg terminal threw up Sobha, and that stock rallied quite a bit. I'm not saying that the same could happen, but Yash, great identification yesterday of one of the trends that the terminal throws up. I think a lot of people have asked us on the various platforms about how does the terminal throw up these indicators. So the terminal gives 4 or 5 stocks on any given day. Out of that, there is a choice done of the strongest indicator, and then we put it out. If there is no indicator giver, we do not give out that segment. So on odd days, you will not see this segment coming as well. But if there is a confirmation of a trend according to the terminal, then we put it out. Yesterday was Sobha on the long side. Today it's ICICI Prudential. Let's wait and watch how this one reacts. Thanks so much, Yash, for putting that into perspective. We'll get to these stocks in a bit too, but first the stock recommendations from our experts. Gaurav, can I start with you? Your stock recommendations for this morning?
The first recommendation at this stage would be a buy on L&T Finance Holdings, where we have seen there was a hurdle at levels of 125. It's given a move beyond these levels. Now the kind of breakouts that we have seen on daily and the hourly charts, some amount of additions in the open interest segment as well. It can head towards the level of 132, 133, when they keep a stop loss of 124.5. And UPL is looking a little bit vulnerable. There's a strong resistance at area of 615. On daily charts, you can term it as a early sense of a double top formation happening. And it's more of a price action that we saw. We don't see aggressive long positions getting built in the name. So not at the current levels, but any jump towards the level of 600 can be sold. Stop loss of 612. On downside, 578 is what I would be looking for UPL.
Amit, what are your ideas for the day?
Yeah, so I have two long ideas. My first recommendation is buy on Blue Star. The stock has seen a very good consolidation, taking support around 780 odd levels in the last three to four trading months. And if you look at the last couple of week activity, it has seen a good volume traction and showing a sign of a breakout of these consolidation range. In my view, the more the stock holds above 820, 800 odd mark, the more momentum it will gain. On the upside, one can look for target on the short-term basis close to around 920 to 950 odd. And on the downside, 800 will act as a very good positional support for the stock. My second recommendation is what Yash discussed, is ICICI Pru Life. Now the stock has seen a very good rise since 280 odd levels, and now if you look at the consolidation from 540 odd range, it has seen a very good time and price correction towards 470 odd. If you look at the short-term pullback in the last few trading sessions, the stock has given a breakout above 480 odd levels, and it's been holding above that with very good volumes. So 480 will act as a good support level or a stop loss level for the stock. On the upside, one can expect the stock again retouching towards its 535, 540 odd levels, which was its recent high.
Okay, just a few more stocks, and we'll talk about that. Yesterday's session saw the results of Tata Elxsi and a strong set of numbers propping up the stock too. I think the stock finally closed at about 5% higher. And in the similar space is KPIT Tech. That too saw a big run up of about 6.5% in yesterday's session. Mayuresh, do you like this space, particularly IT that feeds into auto, provides content and the other software solutions?
Yeah, so Elxsi is good at that, right? Because the bulk of the revenues come from that. Yeah. And good set of numbers. So I think the top line performance in constant currency dollar terms is good. The outlook thereof, I think, also seems to be pretty stable. So I think it's trading way above its 21 and 50 moving averages, which probably should act as a support. But yeah, I think as a sector, as I said, I think we're a little bit more selective. I think NIT Tech is somewhere, I think, the numbers can still stand out, and among the top names, I think HCL Tech, because our expectations is largely that organic growth should be better for HCL Tech in this quarter as well.
Mayuresh, yesterday the monthly AP data for a lot of these life insurance companies turned out very, very positively. ICICI Prudential as well, not as bad. Now, the key is because of valuations where it is the cheapest. Would you go out and buy an ICICI Prudential? What is your argument for or against buying ICICI Prudential?
So I think the only argument against, Neeraj, if you ask me, would be that it has a higher proportion of ULIPs, right? So I think the management is very, very consciously trying to get that portion down and get the protection part of their business up, as is the case for the other players as well. So if I have a strict comparison done with SBI Life, for example, even the component of ULIPs thereof is relatively higher compared to HDFC Life, which is far more expensive, right, on a return to embedded value basis. So I think the general trends for the sector as a whole remain very, very constant. The new business premium is growing at a very fast clip. The value of new business margins are improving at a good rate as well. So I think every management is very, very hopeful with the change in products, specifically skewed towards the protection part of their business. The VNB margins should improve over the next few quarters. And we are probably heading into the strongest quarter, the Q4 quarter for life insurance players. There's a lot of tax saving instruments thereof and a lot of premium collections probably happen at a larger scale in the last quarter from Jan to March. So again, a large element of this sector being relatively better placed if I have a longer term horizon probably is very, very plausible. Nothing wrong, as I said, with any of those players at this point of time. Stack it up. I think HDFC Life the most expensive, followed by SBI and ICICI Pru. But hey, I think the numbers will start coming through over the next few quarters, as well as penetration increases, the bank assurance tie-ups through their individual networks increase as well. What we probably still hold on as a recommendation is SBI Life, though. So.
Okay, SBI Life as a recommendation. But yeah, the only argument against ICICI Pru might be the higher share of ULIPs, which maybe they bring down at some point of time as well. Well, a clutch of other names we'll watch out for. Divina, this whole set of gains that we're seeing in the pathology companies as well. We speak Dr. Lal, yes, but Metropolis the last few days, yeah, Diagnostic, yes. I mean, the Metropolis gains in the last few days have been quite exceptional. 1 month returns 31%, but a large portion has happened in the last 6 days.
Yeah, and Dr. Lal also, like you said, has moved up to about 1650 odd levels. I'm almost matching up to Metropolis. Remember, this was a stock that Saurabh Mukherjee had really liked a few weeks back when he'd spoken to us, and it's a keeper in the portfolio, according to him. Just a minor blip in the middle when the news of Reliance stepping into the diagnostic space had come in, when most of these stocks had retreated a bit. But we'll get in a sense as to what to do in these stocks as well. But a few seconds left to go for market pre-open. Nikkei is still up, holding on to gains. Hang Seng has dipped into the red, while Shanghai is flat. SGX Nifty still holding on to those 15 points gained in early morning trade. 12,373. Watch it for the currency this morning and how it plays out along with the bond market yields on the back of the steep inflation numbers that we've seen, the CPI numbers that came out yesterday post-market as. Nifty's opened lower and Sensex with 1/3% gain, but gyrating quite a bit, so we'll wait till 908 till these prices stabilize. Individual counters as well. Wipro ahead of numbers. That's the first tick you're seeing that's not going to stick, so 9% on Wipro is probably not going to stick. And you've got Yes Bank, which is up 2.8%. Titan is up 2.25%. Bharti Infratel, Cipla, Vedanta, IOC, that's up about 1% or so. And SBI at 332 continues to gain some momentum. ICICI Bank too is up in the session. Then you've got TCS, Sun Pharma looking okay. What's not doing well is Reliance Industries, 1510 now. It's down about 2%. And that's probably going to be the big drag on the index too if it maintains these losses. Nestle, Maruti, Hero MotoCorp, Z are some of the other losers in the session. More strength for the currency. So from 70.85, which was the close in yesterday's session, the open is more positive. 70.77 to the dollar is what we've got the rupee trading at. You'll also see the bond yields as and when they come out, but important to watch out for some of those other names that came out with the results post-market, I say.
Yeah, well, Delta Corp could be an interesting one to monitor. And is there a corrective move out there? Maybe not so much right now. Let's wait and watch if this changes during the course of the morning. We will watch out for Tata Elxsi and if there is some continuation to yesterday's up move because of the kind of results that the stock came out with. No, again, a bit of a pause. Religare should have an uptick. I'll be really surprised if it doesn't. I don't know if it started trading the pre-open or no, but yeah, the two names which have gotten into Ashish Kacholia, Mukul Agarwal typically evoke response. Stock was up 5% yesterday, up 5% today. I don't know if Mayuresh has a thought here. We'll ask him about it. HCC gains a little bit after yesterday's move as well. So maybe up about 8-9% in today's session. And I think we'll watch out for all the usual names, the cement names and the PSU banks in particular today. Whether the likes of Central Bank, PNB, BOB, etc. all show a corrective move. SBI too, because of the yields. I think that is something that we will watch out for. The yields would be a very important factor, and we will monitor what the bond yields are throwing up. My guess is that they should start off slightly higher, but let's wait and watch what happens. 6.69, that's a sharp uptick from 6.59 yesterday to 6.69. That isn't surprise. But I remember we were all looking at Operation Twist and thinking about the drop from 6.82 to 6.49. Anand had mentioned that Operation Twist notwithstanding, there could be a move up to 6.8, 6.9 on the basis of fundamentals. There's a sharp uptick today for sure.
Yep, that's in any case going to have its own bearing if it go back to about 6.8 on the treasury income for some of these banks as well. So we'll keep monitoring that for you. But also important to see what brokerages are talking about today. And Soumya Sarkar, he is joining us to get us quick brokerage calls of the day. Soumya.
Good morning, Devin. On the big brokerage calls for the day, first we have is HSBC on Motherson Sumi. Now they have downgraded its rating on the stock to a hold from a buy rating, but have hiked the target price to 135 from 120. Now, according to the brokers, the stock has outperformed the underlying performance improvement and broader market on European Union uptake. Now, it believes that the share price now factors in some recovery, but ignores the near-term risk. Now, it doesn't expect the share price performance to continue as the current valuation factor in complete reversal of losses for its greenfield plants in US and Hungary, and a decent recovery in the domestic car market and no major decline in European car market. However, it ignores a near-term risk of production disruption in Europe on account of the upcoming CO2 norms, which can lead to last-minute production cuts, thereby impacting the operating leverage for suppliers. The second one is on IFL on ICICI Lombard General Insurance. Now they have maintained their buy rating on the stock, but have with the target price of 1,500 rupees, and the brokerage is expecting acceleration in year-on-year earnings growth from third quarter of financial year 2020 after 4 quarters of subdued growth depressed by new business trade. Now it also sees higher losses in the motor segment driven by greater pricing pressure. On the other hand, it is expecting the fire and the health insurance to drive growth and no crop insurance written off in the second half of financial year 2020.
Right, Amit, thanks very much for that. Mayuresh, I want to come to you and talk about the real estate space. Started picking up at the fag end of 2019.
Yeah.
Still not out of the woods, lots more that can be done, but stocks are responding. You're seeing interest coming back into the names like DLF, Sobha, Godrej Properties, even the smaller ones like Ajmera Realty. Now this is a space, if it does see a turnaround, can be extremely good for many of the feeder industries.
Absolutely.
You want to talk about real estate and what your view is?
No, absolutely. So I think the outperformance itself was very, very stark, right? 20-21% outperformance in spite of all the issues that the sector is facing even at this point of time. So inventories, liquidation, realizations not coming through, high leverage on their balance sheets. But still, I think a few stocks have done phenomenally well. The second element obviously is the annuity part of the business has still held up pretty well. So I think if you look at the residential part and compare with the annuity part is somewhere that has been a saver of sorts for companies which probably have both these elements within their business model itself. But the third element is that it's going to be a very, very slow and gradual recovery, Devina. So I think the feeder effect that you're talking about, right, as the demand starts picking up, which I'm not sure when, it's 2 quarters, 3 quarters away, and let's not preempt that at this point of time. I think the multiplier effect is well known, right? So we were just discussing that paints, wires and cables, tile makers, sanitary ware, ceramic players. I think everybody probably benefits with the whole thing, housing finance companies to that extent. But I think we'll remain extremely selective because of the run-up that we've probably seen. I think Nesco is something that we still continue to hold because our belief is that it has got very, very strong dynamics on all these fronts, which can probably get reflected in better numbers.
You know, Apollo Pipes as a stock, I mean, we've been speaking about the other Apollo Group company, but Apollo Pipes as a stock has rallied quite a bit in trade yesterday and therefore hitting fresh 52-week highs for itself. We're speaking about some of these home improvement related stocks, so do watch out for that. The other, I would want to talk about that stock with our technical experts as well and the derivative experts too about some of the others. But just one quick follow-up on Mayuresh very quickly. On Religare Enterprises, do you track the business at all? No. Ashish and Mukul getting into it, the stock has gotten excited. Do you have a fundamental view?
No.
Okay, but the stock is no, completely fine. But it's just that the stock has done so well. Very interesting. Amit, can I come to you on IndusInd Bank? It's an interesting one because there is an event today as well. But yesterday did a very, very interesting move wherein it was looking weak and suddenly saw a sharp bounce back intraday. How do you approach this in the run-up to the results?
So the stock is seeing some supportive action in the last couple of weeks, and in fact yesterday, as you rightly mentioned, the stock reversed quite sharply around the support level of 1480 odd. In my view, the stock is trading with a positive biasness. However, important to watch out would be a sustaining above 1550 odd mark. That's the key resistance what it has been struggling since July 2019 onwards. If it starts sustaining on a closing basis about 1550 odd, I believe there can be further pullback towards 1660 to 1700 odd levels in the near term.
Okay, Gaurav, Bissa, the other one which is looked very interesting yesterday was Bharti Airtel. Now, if you look at the positions and the charts, because I know you look at both, what do you make of it? Somebody was saying yesterday that As per some point and figure chart, it's broken out of some key support levels. Now, you track charts more closely than I do. What do you make of this?
No, if you look at the charts, then yes, it is on the verge of a breakout. And when you talk about point and figure charts, basically people will look at double top sell, and that is it needs a little bit confirmation as well. But yes, if it sustains above level of 474, then there's a good chance that it can go towards the level of 500. When we spoke last time, it was trading on the same levels, and I had said as long as it's trading below 474, thing might not be that interesting. So my view remains the same. 474 is the immediate hurdle. If that is taken out, then one can buy the stops of 468, 469 on the upside. 500 is what I would be looking at.
Okay. 6 minutes left to go for market open. We're just about settled at around 12,333 on the Nifty. So absolutely flat on the index. No major moves that we're anticipating there at the start of the session though. 1162 on Titan. The flatlined a bit after 1 or 2 days of good gains. Would you trade this stock, Gaurav, Bissa, Titan?
It's very difficult to trade. It's basically giving false breakouts. It's also giving false breakdowns. And it's very difficult to gauge where the action would lie. It's stuck in the range. 1130 is the immediate support. 1210 is the immediate hurdle. So as long as it's trading between this range, I would not be too interested in taking a position.
Okay. The other one is Bandhan Bank, and we'll talk to Mayuresh about it. It reports its numbers today. But we're just minutes away from market opening, so we'll tell you all that you need to know to stay ahead in trade today. It was a weak quarter for Delta Corp. Revenues were flat, while margins too saw a contraction. The stock and free opens down 3%.
In key bulk deals, Axis Bank sold 90 lakh shares in Religare Enterprises, where Ashish Kacholia was the buyer, acquiring 40 lakh shares. Mukul Agarwal was the other one. The stock locked up 5%.
HSBC has downgraded Motherson Sumi to a hold from a buy, says the stock price is ignoring the near-term risks.
NMDC has completed the execution of mining lease agreements for 4 mines in Chhattisgarh, the lease of which is valid till 2035.
And IndusInd Bank, along with Wipro, will be the 2 Nifty companies reporting their third quarter numbers today. And non-Nifty company is Bandhan Bank. Mayuresh, what do you expect from Bandhan Bank?
So it should be a relatively strong quarter on a standalone basis, right? But the expectation again is with the merger of Pru. I think the NIMs will obviously come down. But I think the advances growth so far for the first half, and I think that will be a replication of what they probably do in this quarter as well, should reflect stronger growth numbers to come through. Now the street probably is also looking at is the asset quality numbers as well, specifically in terms of the pre-merger and the post-merger stats at this point. So I think the street has got readjusted that because of the merger, I think the AUM does move higher. The advances growth might just taper off a tad bit, and the NIMs might just come off a tad bit. But I think the commentary will do the trick for Bandhan. I think they're able to hold on. In my opinion, I think steady numbers should get reported. I think the higher multiples probably get justified for a stock like this.
Do you think small finance bank will be small finance banks as a whole, as a segment, will be in focus with regards to their earnings? Because some of them have said that they're taking a conscious effort not to go big in terms of their advances and loan offtake.
So advances or loan offtake is absolutely there in terms of their commentary, right? In terms of their branch setup as well, I think they're becoming a little bit more conscious as well, because I think they're not trying to expand too fast, because the break even for all these branches takes a huge toll in terms of their cost and correspondingly on their EBITDAs as well. So I think any small finance bank that you probably see, I think are going very, very slow in terms of branch expansion at this point in time. And the entire focus in terms of the retail outlay, right? I think that is where the entire focus lies. But I think it's a long, hard-working journey. I think all the others that we've probably seen are also in that same pie. So I think the entire retail chasing pie is also going to take a toll in terms of how these small finance banks actually react. So I think better off with the larger private ones.
Yeah, and then now after Ujjivan, we will watch for Equitas once that gets listed.
Yeah, and that will be the interesting one too. So do watch out for those names. The other pocket which looked very interesting yesterday is FMCG. I think HUL drove the gains, but Britannia was up about 2%. Colgate saw fresh long. So there was a lot of activity in that pocket. Amit, maybe you already gave an idea in the FMCG space, but if you haven't, which of these large staple companies, Colgate, Britannia, Dabur, Marico, or HUL, look poised for a good trade, if any?
So I would believe Dabur is a very good bet from here. In fact, from a position standpoint, I believe that the stock can see in the 6 to 8 months time frame outperforming all the other FMCG stocks which you mentioned. So Dabur, in fact, in the last 3 trading session has given a very good breakout, sustaining above 450 odd mark. And after breaking above 470, if it spends more time, I believe the stock can see some 10 to 12% up move in the coming couple of months time frame. So I think Dabur is a stock which can be added to the portfolio in amongst the other FMCG staple counters.
All right. We've got a minute left to go for market opening. Mayuresh, take time out to thank you.
Thank you so much.
Very much
Thank you
for joining us this morning. Also, time now to get in those quick top calls going from both our technical experts too. So, Amit, let me come to you first. What's going to be your top call for the day?
So as I said, Blue Star and apart from Blue Star and ICICI Pru Life, I have other 2 counters which are in my radar. One is Ramco Cement and the other is the IPCA Laboratories. So IPCA, I'm more looking forward for the stock is hovering in a flag formation on a short-term basis. The more it sustains above 1195, I believe there can be a good run-up of close to 50 to 60 odd points in the near term.
All right. What about you, Gaurav Bissa?
For today, L&T Finance Holding is what I would be going with. A good breakout, some amount of predictions in the opening segment as well. So for me, that is a good name. It can head towards 132, 133.
Okay, so those are a couple of names that you should watch out for. Take a moment, gentlemen, to thank both of you for joining in today and giving us your time. Really appreciate and your ideas as well. But about 10 seconds left for the markets, or actually less than 10 seconds. We'll start off well, or maybe flattish if the pre-open rates are to be believed, or the rates are to be believed. The question is, can we build on from here, or do we stay lackluster? So the start is flat. 12,327 or thereabouts for the Nifty 50. The Sensex down about 31 points, so 0.08%. The Nifty Bank is correcting. I wonder if PSU banks are to be blamed here. We'll watch out for State Bank of India. 60 points lower, 0.2% lower in trade. So that's the start. Very flat, except for the Nifty Bank, which is marginally lower, about 0.25%. The mid cap and the small cap indices should also come up on your screen. And let's see how they are trading. 0.19% for the mid-cap index, small-cap index about 0.18% in the green, by the way. So they have started off okay. Let's talk about individual movers and get the heat map up on the screen. Yes Bank down another 1.5%. There is weakness in SBI and ICICI Bank both. So both of them start off about 0.5% lower. There's weakness in HDFC and Bajaj Finserv. So clearly, select financial names, heavyweights, all of them are down. HDFC Bank and Kotak too marginally in the red, and Reliance is lying absolutely flat. What is doing well then? GAIL up about 1.5%. Wipro gains about 1% ahead of its numbers. There's some gains to BPCL, some gains to TCS, some gains to Mahindra and Mahindra, but very muted. So the only one which is actually making a noticeable move is GAIL, which is up about 2%. And the ones which is correcting is Yes Bank, now down about 2.5%. So clearly under a bit of cloud is Yes Bank. What about some of the other stocks? Stocks which should be in focus because they're trading around 52-week highs yesterday, and stocks ahead of the numbers and what some of those are doing. So these are the companies that were trading near or at 52-week highs yesterday. Now Apollo Pipes and IT Tech or Metropolis, all of them start off very, very flat. So no big gyrations today, in line with what the mother market is doing, which is the Sensex and the Nifty. The broader market winners of yesterday are starting off flat. What about companies ahead of the numbers? Bandhan Bank, Mindtree, 2 of them count at numbers. Bandhan up about 1.5% ahead of the numbers, and Mindtree about 0.9%. Remember, IT earnings haven't started off bad. Infosys more or less in line, but Tata Elxsi doing well. If Mindtree also does well, then you maybe have a case for being optimistic about the IT earnings this earnings season. Devina, what are you spotting?
Letter Corp for one, not too great in terms of results, and the stock's down about 3%. Viatech Vabag, that's down about 1.7%. Motherson Sumi, that's down too, about 1.5%. MMTC, Alchem Labs, these are some stocks that are losing out. BF Utilities, VIP, Future Consumer at 25. You've got RBL Bank at 354. The likes of Anandra Bank, PNB Housing Finance are some of your losers in trade this morning. Amongst the gainers from the broader market space, well, the breadth of the market seems more positive as well. You've got Den Networks, which is up 4%. Religare is up 5%. All Cargo is up 3.5%. Indiabulls Real Estate up 3.5%. Magma, FinCorp, Advanced Enzyme, India Cements 1.7% higher, and Somani Ceramics also is doing well. Almost 1:2 in favor of the advances, but not quite there yet. So about 738 stocks advanced. We have about 409 stocks that are looking weak. Pashupati Advani, founder at Global Foray, is joining us right now on the show. Pashupati, a lot of talk on how this rally and the sustenance of this rally is questionable because none of it is being supported by the actual profitability of companies. It's only liquidity driven, and that probably will dry out at some point. Not putting a finger on when, but would you question this rally?
Well, I think you've summed it up perfectly by saying this is liquidity driven. I've always been a believer in liquidity driving our markets. And one of the main things that's still happening is that SIPs are still coming into the mutual funds and they're obviously continuing to buy. Some of them are buying more of the same, but I think there is a trend to move to good quality mid caps, and I think we're seeing that right now. I mean, even the names that you were just mentioning, a lot of them are solid companies with solid businesses. Overall, I think that our market is a follower market. It's not a leader market, and all global markets seem to be doing well right now. So we are going along with them, and central banks seem to have liquidity, so they're pumping it into the system. But I think the FII flows are slowing down. So that's one of the other challenges because money, I think, is going back to the US. I mean, just look at Apple; it's gone from 200 to 300 in the last 4 months. So would you need to sort of be in anything else?
Yeah, Tesla maybe.
That's done even better.
Yeah,
no, but that is a true Pashupati, and the fact that there is no visibility of the central bank in the US even or the Fed pulling back this liquidity, because you've just about started seeing PMI data improve. The moment you start to withdraw that liquidity, you're going to see growth numbers starting to come off, and which I don't think is at this point something that they want to look at. So that is going to feed into liquidity, and that's going to continue to feed into the equity markets. From an India standpoint, foreign money is not coming in, and like you said, it's going to stay with the US. So what is going to be the driver then for us?
Well, for us, obviously there is two pockets. There's money looking for places to go, and then there's money sitting in places where they don't want to lend. So I think that while it's looking for places to go, one of the areas it will come into is the stock market. Previously, a lot of this money used to go into real estate and into financing of businesses, but with the business financing looking riskier and also real estate looking like still looking like a mess, money is obviously coming into here, and you could even look at a high quality real estate player rather than buying real estate as an example, and you'll probably do better off.
All right, we've also got the budget coming up. The big challenge this time is going to be how to tackle this growth emergency that we're probably facing at this point. So you think that the government now really needs to focus on out-of-the-box ideas to make sure that they can spur growth in this budget? And what, according to you, will be those kind of measures that could likely do the trick?
See, I think that in my opinion, the government is quite comfortable with deficit financing. And frankly, one of the economic parameters has to go, and I think that's the one that's going to be thrown out. They have to do something bold. So, my humble suggestion would be to sort of radically cut GST, for example, at least for 6 months as a trial and see how it works. And if they get a combination of higher compliance as a result of lower rates, because one of the challenges is the rates are so high that people are finding it inconvenient, I would say, to comply. So I think that if rates were more sensible and in maybe single-digit rates, then that would be a real boost for markets and for businesses. But I think that's a little radical because that's 500,000 crores out the door or something if you take it for a year. If you were
also, out of the purview of the budget, you think the GST Council would do on the rates? What is it that they can do in the budget, though?
No, I mean, obviously, when you say budget, you mean the whole, they put railways in, the GST Council will meet right on top of the budget. So, but I think that there's no buy-in from the states as well, which is not going to help. So, you cut the rate, say you cut the rate from the average of 18 to 12, the states are going to say, fine, center, you absorb the 6, and that's not going to work. So, that's the challenges we have. I mean, that's the bad part of a democracy.
So aside from the taxes, anything else in terms of, probably taking a bigger fiscal hit to spur demand, to tackle the demand side issue rather than the supply side issue now? Anything that you feel that the government can do with this budget?
Well, they've been giving money to the bottom end of the population, the below the pyramid, the bottom of the pyramid. So I think that whether is there likely to be an income tax cut? Probably not. I think maybe the rates might go down, but the slabs will go wider because I think that there is inflation in the system. But I think that the real cut would be GST because, frankly, if we had no income tax and only GST, that's the way our country is going. I mean, that's the only way to catch all the cash money. So and the fact is that cash is back in the system. Unfortunately, we can't wish it away. It's still there.
It certainly is. Okay, what people can't wish away also is the kind of meager fate that seems to be awaiting some of these companies which are under a bit of a cloud. Pashupati, I don't like talking about Yes Bank as much because the retail crowd gets caught in. But with you, I would love to talk about it because you call a spade a spade. My question is, with all that's happening around Yes Bank, do you believe that there could be merit in even thinking of buying it, or would you reckon that it could actually go down as low as some of the price targets are suggesting, 25 rupees, 20 rupees, in some conversations even lower?
Well, now the foreign press is beginning to look at it, saying that if something isn't done with Yes Bank, it's going to cause a further financial problem to the country. There's actually an article floating around from Washington Post, which has just come out, which actually suggests that someone should swallow it and suggests pretty strongly that State Bank should be the buyer. I mean, I'm not in agreement with the article, but the reality is that I don't think we can afford another financial contagion at this point, because again, it'll disturb the NBFCs and the banks, and it'll hurt the whole sector and make people even more reluctant to lend. And that's, you're talking about the demand side. The demand side will disappear if that happens.
Okay. But as an equity investor, would you reckon that even if you have it under your portfolio, get out of it right now?
Well, I'd certainly remove my bank deposits from it.
But not the stock. You would keep the stock.
Stock is a different story. You're playing it for a different, it's a different speculation. No, okay. I'm not.
You're not playing.
Yeah, I mean, you're doing it for speculation. Whether you buy it at 40 or you buy it at 25, you're doing it with the speculation of doubling. You're not doing it with the speculation or losing your money.
Okay.
I think you're in that zone right now.
Double or quits.
Double or quits.
Yeah, I don't think it has anything to do with how the bank does or performs at this point in time.
Yeah.
So let's talk, since you brought up SBI, let's talk about SBI then. The initial excitement about resolutions, faster pace of resolutions, got the stock very excited. Stock's at about 330 right now, but not just talking about the stock, but the fact that, do you see that SBI is capable of probably being the only PSU bank that could go neck and neck with some of the private sector banks, or that's still some time away?
No, if you look at all the PSU banks, they're all in some kind of merger activity right now. The government is consolidating all of them, and they're all going through that thing right now. SBI is the only one who's completed buying all the smaller SBIs, and actually what they did was first put their computer systems in there, and then they literally, when they merged, they just had to change the hoardings and the stationery. They'd already put the systems in place. So they're the only public sector bank that is actually in a position today to take on anything, whether it's an NBFC or another bank. The private sector is obviously pushing back. There has been rumors of some of the other private sector banks who have been, they're trying to push them to buy Yes Bank, but doesn't seem to be having any takers. And it's sad. It's a great institution that had moved and looked like it was doing great things, and it's unfortunate that it's going to go this way.
Well, some of the other PSUs, Pashupati, my final question really is, are doing well too. My question is, would you go out, as you look at the system, divestment, etc., go out on a limb and try and make an investment into, say, a BPCL with the hope that the target divestment price, whenever it happens, whether it happens in April or in July or in November, would be much higher than what the current EV/EBITDA valuation suggests?
And media reports now suggesting that IOC is also weighing in to make a bid.
Yeah, so I mean, I think that the valuation that they want for BPCL, we will get it. I mean, there's even talk of Aramco buying it. So, because at the end of it all, they want to distribute petroleum into the country that's going to use it, and we are certainly there. Again, people are a little apprehensive about the auto sector simply because of the dynamic shift into electric cars. And I think that's the bigger challenge then, do you want to be a petrol pump owner, or a petrol pump manufacturer in an era where, you know, electric cars are coming. So there's been that disruption which we need to take care of, and I think that's the real fear rather than anything else. But yeah, I mean, all the you know, you see what has happened in HPCL. The answer is very little. I mean, except for the financial transaction that took ONGC's money out and gave it to the government, I don't think there's very much shift in the management. It's still being run separately. There's no real merger synergy as a result of it, except that, you know, the 30,000 crores or whatever that they spent is now off ONGC's books and is with the government. So in BP, I don't know what's going to happen. I saw the press of IOC taking a nibble, so let's see what they do. It definitely makes sense to have more, I mean, bigger players, certainly in the, you know, as we go out, because you need to have more petrol pumps, that's for sure.
All right. Great talking to you, Pashupati. Thank you so much for joining us.
Thank you very much.
All right, moving on then. Can skill overpower luck in the game of investing? Howard Marks of Oaktree Capital lays out his take in an interview with Bloomberg. Marks also explains why investors should not have risk in their portfolio at the current juncture. Listen in.
The market's been up for 11 years. It's quadrupled off the low. We're in the longest bull market, the longest expansion in history. Profits are not rising. Stock prices are. It's what we call a liquidity-driven rally. That means it comes from people having a lot of money to spend. If you put those factors together, it doesn't mean that the market's going to go down tomorrow, but it does mean that the odds are not, in my opinion, in the investor's favor.
Is that to say that now is the time, Howard, to be a contrarian? Because as we both know, the economy is growing at a reasonable clip. Forecasters say the odds of a recession in 2020 have declined. Stocks, as we witnessed last week, brushed off, right, the threat of Iranian hostilities and surged to a new record. And of course, high yield spreads keep edging closer and closer to a new post-crisis low.
Right. Yes, well, the way I would phrase it, Eric, is that this is a time to have less risk than you did 3 or 5 years ago. You know, 3 or 5 years ago, we were here, and now we're here. All things being equal, if we're here, we should have less risk than here. And I don't know whether we're going to go over the cliff tomorrow or continue straight up to the sky, but the odds are less in the investor's favor, in my opinion, than they were 3 or 5 years ago.
Howard, I want to get to the substance of your new memo.
Yes.
You call it You Bet.
Yes.
Frustrated investors say the stock market is no better than a casino. Are they right?
Investing, as I point out in the memo, involves hidden information, luck, and skill. And the question is, how much skill does that investor have? If you don't have much skill, then you're down to luck and hidden information, and it becomes a coin toss. But if you have skill, you can perhaps have an edge. It's the difference between roulette and poker or blackjack. You know, a lot of people, there's a science to playing blackjack. There's books written about it. You can actually get good at it.
Bill Gross got awfully good at it.
That's right. You can get so good. Ed Thorpe wrote the book called Beat the Dealer, and he was barred from the casinos. He was too good. So you can get good at it. You can turn it into a skill game. But most people who haven't read the book and don't know the theory and don't study it, for them it's luck. And they go in and they sit there, I don't know, should I hit 16? Should I stay? And if you don't have the skill, then you shouldn't expect to be able to control the outcomes.
Well, that's Howard Marks for you, talking about taking risk off the table. He's been at it for a while. Let's see how it works out. But an eminent voice, somebody who the whole world pays heed to, and so should you. We take a break though, on the note that the markets are trading absolutely flat, with the banks showing a bit of a downtick, about 1/3%. Coming up on the other side of the break, we talk about the recent reforms announced in the coal sector with Chetan Phalke of Alpha Invesco Research, and talk about the spike in consumer price inflation with Siddharth Sanyal, Chief Economist at Bandhan Bank.